So, welcome to joining me today on our free live training, the W-2 Live. They never taught us in school. And this is real, y'all. I don't know how many of you guys are still W-2 employees, but this is real. I'm so excited for you guys to be here with me today. Thank you for taking out on your Monday to be here with me. So, I hope to deliver with you for you today. It's going to be 60 minutes. I'm going to teach you a strategy in stock options that you can begin to paper trade by Wednesday. So stay tuned. We got a lot of great information to share with you today. So welcome. Thank you. Happy Monday. Okay, so who am I? I'm Dr. Uchenna James. I'm a pharmacist and I'm also a stock options trader. So I learned to trade because I am a W-2 employee. I've been a W-2 employee for 35 years, okay? Almost 35 years. Started a little earlier than I probably should have. But over the time of being a W-2 employee, I realized that I'm not keeping the money that I should be keeping according to like my gross income. This is a problem. So I graduated from the University of Michigan. I'm a practicing pharmacist. I've been trading for over 10 years now. I've learned a lot. I'm also a wife, a mother too. I'm very, very busy. So my mission is to empower women to financially get independence through trading stock options. So welcome. Let's get started. So after 60 minutes, what you're going to walk away with is just knowledge that your paycheck is not going to make you rich. Okay. The W-2, the real numbers, it's not really that, motivating. I'm going to teach you about stock options in plain English, the call, the put, the premium, the strikes. No, not a whole bunch of, jargon, nothing exotic. I'm just going to make it as simple as possible. One strategy that you can run by Wednesday, it's called the cash secured put. And today we are going to place that trade live on our platform, thinkorswim. Okay, you're going to watch me set up a real trade. So how to get started trading? I got started trading because I needed more money. The W-2 job just wasn't paying all the bills that I thought it was going to be. I needed to do more things. I wanted to do what I wanted to do with who I wanted to do it with. I wanted to pay for, tennis lessons. My kids are really good and they travel. And all of those costs began adding up more than my W-2 job could afford. And so I was always interested in the different stocks and the different companies that we wear every day, like your Googles, your Apples, your Microsoft. Those are always intriguing to me. But I realized like they had like good valuation profiles, meaning they were profitable. And so I wanted to dibble dabble a little bit and find out how I could make money trading. So I would, trade some stocks here, trade some shares here. It's very, very expensive to trade actual stocks. And this trade show actually came to our city and they started teaching us how to trade stock options. So I just signed up and I was like, okay, let's see where this is going to go. And I was just really intrigued on how you can use less money to trade the same type of stocks in by using options. And I was very interested in it. So I would usually kind of like piecemeal my own plan. I would watch this YouTube video here or watch that YouTube video over there, trying to piecemeal a formal system. And I was trading, making a little bit of money, super happy when I made like $1,000, but bum when I lost like 1,500. But when I lost $10,000 in one day, I said, oh no, there's got to be a better solution. I can't go on like this, but I was hungry. So I pulled out that credit card. I invested in coaches. Okay. The fastest path to mastery is through coaching. I spent $40,000 on coaches. I also bought into their trading platform that they were offering at the time. And then I began to get really good. Hold on, I have a chat. I know, ouch, right? It was very, very painful at the time. And it actually it hurt my esteem. I was feeling kind of low because the last thing I wanted to do for my family was lose money. So investing in coaches were really, really helpful. And then I started piecing together my trading plan, but with information from the coaches that were very experienced. And they helped me build the trading plan and helped me through it, actually walked me through it, holding my hand. And that's how I started to get good at trading. And I started to get good. And surely when you get good at something, you start making a little money. Other people are asking you, like, how'd you make that money? What are you doing? And so I just told them I've been trading stock options. So that's how we got here. Okay. So let's talk about the $100,000 mistake. Okay. So the average pharmacist earns about like $4 million, right? Over a 30-year career. But retires with $1.5 million in the 401k. And some of you guys are like, oh, okay, that's pretty good. But you see, there's a big gap right there. Okay. Where's that other 2.5 mil? Let me show you the math. So over this is look the discrepancy as far as earned versus what is kept. So earned over the 30 years, 4 mil, right? Kept in the 401k and the savings, which who knows what the interest rate of that is, 1.5. So that's the gap, $2.5 million. What did I earn and what I actually kept? Okay, so let's go through the W-2 math. Paycheck, 135,000 a year, that's your gross income, right? 30% taxes. And I know some of us are entrepreneurs, so we probably may not be paying that much in taxes. Good for you. Kudos to you. And I know if you guys don't have an LLC yet, I'm not going to talk about that in this class, but you definitely need to set one up. Holla at me. Okay. And okay, so it's like $70,000 worth of expenses a year that I was just paying out. Housing, kids, lives, regardless if we want to or not, regardless if we can afford it or not, it's going to do what it does, right? And in my 401k, maxing it out was about $23,000 a year, give or take, right? Depending on the year. This is all averages. What was left over at the end of that year was nothing. Nothing was left over. So the W-2 plus your 401k is designed to keep you stable, not wealthy. What's missing? A second stream of income that doesn't cost it doesn't cost you more hours. It's something that you could actually do in your 401k. What is that second stream of income? Stock options. Okay. That is a second stream of income that you can actually put on and use in your 401k to shorten that gap. Okay. That's not a budget problem. This is not a budget problem. This is a strategy problem. Pharmacy school taught me how to dose Coumadin to keep an INR in range. It did not teach me how money moves. This is important, you guys. So take notes, write it down. I'm so happy that you're here with me today. We're going to keep talking about things that really matter, how to keep more money in our pockets, okay? Because we got to get paid. Okay. So options in plain English. 4 words that you need. Call, put, the premium, and the strike. Okay. Master these 4 words. Everything else is just jargon, Wall Street salad words. Okay. It's nothing exotic, but you need to know these 4 terms. Okay. And I teach you that in my course that I'm going to share with you later on today. So what is a call? A call is the right to buy a stock at a set price. What is a put option? And these are 2 types of options, a call option and a put option. A put option is the right to sell a stock at a set price. What is a premium? A premium is what somebody pays for the right if they're a buyer, or what they receive, the money that they receive if you're a seller. Because when you sell something, you receive money from it. That is called the premium. Also, you need to know the strike. The strike is the agreed upon price of that contract, okay? Buyers pay, sellers collect. As queens, we're going to do the collections, okay? Tonight, you are going to learn where the queens sit. Most of us sit on that selling side. Okay, so let me, kind of explain to you guys this in terms that you're going to understand because most of you guys, if not all of you guys, pay insurance, right? You already understand this, you just don't know it yet. How to trade stock options, how to sell puts. And that's what we're going to be talking about today. So let's take a car insurance, right? You pay the insurer a monthly fee. Okay, every month to have insurance, you got to pay the insurer a monthly fee. In exchange, you get the right to file a claim if something goes wrong. Okay, the insurer collects the premium right up front. You pay it, it goes out of your account and it goes into their account. Okay, if nothing goes wrong, if you don't submit a claim, the insurer gets to keep that money, right? Okay. So this is very similar to stock options. As a buyer pays the seller a premium up front. In exchange, the buyer gets the right to buy or sell at a set price. The seller collects the premium up front, okay? If the buyer doesn't use it, the seller keeps the money. Okay, very, very simple. So as like insurers, you're the owner and the renter. So you keep the money, you're renting what you already own and you keep that. Make sense? Let's go on. Let's say in 10 years, you've never crashed the car, right? Do you get that money back? Who wins? The insurer is the one that wins. I want to be on the winning side of that equation. How do we do that? Cash secured puts. Okay, I'm gonna break it down for you. So this is another diagram of the call. So the call, like I said, gives you the right to buy. If you think the stock, so let's think of Apple. If you want to make money on the market when it's going up, you can buy something called a call option. So let's say I think Apple's going to go up by the end of the week. I'm going to buy a call option. It gives me the right to buy the stock, 100 shares of the stock. I think it's going to go up. I pay a premium for the right to buy this at a fixed price. If the stock goes above my strike, I make money. I got a profit. Okay. If I think Apple's going to go down by the end of the week or by the end of the month, I'm going to buy a put option. This gives me the right to sell Apple at that particular strike that I bought it up. If I think the stock is going to go down, I'm going to buy a put option. Okay. I pay premium for the right to sell at a fixed price. If the stock falls below the strike, I make money. I make money on that if I bought the put option. Tonight, we're going to focus on selling puts, and that's the queen move. Let me show you what that looks like. So 80% of buyers, option buyers, lose money on their contracts. Okay. So who takes that money? The sellers. The sellers are the ones that take that money. So if you want to, maximize your income, maximize making money in trading stock options, you need to know how to sell. So buyers, they pay premium. They bet on the direction. They need to be right on timing. They lose if nothing happens. Like if the stock just stays flat, nothing happens, the buyer's going to lose their premium. They need the stock to move. Sellers collect premium. We bet on time decay. So every day we're making money. If we're in that trade, we're making money because time is decaying away. Okay. We win if nothing happens. The stock doesn't have to move. Cash hits the account right up front. Like I said, this is where the queens sit. Okay. And make sure you guys, in the registration, I put a welcome packet in there. So if you get the email or when you got the email, you can download the welcome packet and that goes over all the terms that I'm referencing right now in a bullet pointed view where you can see it and follow along. Okay. I wanted to make it easier for you because some of this terminology, you may not have heard of it before. So download the welcome packet and follow along. Okay. Buyers pay, sellers collect. So tonight, you're going to learn what side of the table the queens sit at. Let's go. So, what is the strategy that I'm going to explain to you today? It's a strategy called the cash secured put. And that may sound complicated, but I'm telling you, it's the easiest, it's one of the easiest strategies as an option, as a beginner option trader to learn. You can do this on any stock that trade stock options. Okay. This is the quiet move that not a lot of people talk about. Okay. The first thing that you need to do is pick a stock that you would be happy to own. Like there's so many stocks out there, right? Thousands. There's got to be a stock that he's like, you know what? I really want to own that stock. That's the first way to set it up. Okay. First thing you do, pick a stock that you'd be happy to own. Number two, and this is basically how to construct this strategy. Number two, sell the put at the strike price that you'd be happy to pay. So, NVIDIA, okay, my favorite. Let's say NVIDIA was trading, and we're going to actually open up a option chain, a stock chart, so you can see exactly what I'm talking about. NVIDIA, let's say NVIDIA was trading at 220 or something like that. You can sell a put at 210 and get a premium because you sold it. You get the premium, and then you just wait day by day. And then something called time decay withers out, and then that cash stays in your account. I'm going to show you what that looks like. Okay. Number three, you collect that premium. It hits your account immediately. Number four, you wait. See what happens. So NVIDIA can keep going up, up, up. Then you could sell another put. If NVIDIA happens to go down, then you got the stock at a discounted price. Make sense? Let's go. Okay, so we're going to dive into this in a little bit more detail. The most important thing that you have to do is pick the right stock. Okay, we're not going to be picking any meme stocks and all those, crazy stocks that go up, go down, go up. No, we're picking good quality names. Okay, we're going to the Dow Jones, we're going to the S&P 500, and we're going to pick the big stocks, the large cap stocks. Okay, that are profitable, that make money. We're not just gonna, gamble. No, we're gonna pick stocks that have a good valuation profile, that are profitable, that make money. That's very, very important. Okay. We're gonna sell puts on these stocks that we're gonna be that we'll be happy to own. Okay. Companies that you believe in long term. They got to be liquid. So liquid means they got to just be big, lots of volume, easy to enter, easy to exit. That's step one. Write this down or follow along in the welcome packet. Number two, sell the put. So you got to pick the strike. Choose a strike at the price you'd be happy to buy the stock at. Okay. It's going to be below where it's currently trading. I'm telling you guys, you can get the stock at a discount by trading this strategy. Okay. So we want to go like the strike 5 to 10% below the current stock price. The further you get from where the stock is currently trading at, the less money you're going to, get deposited into your account. That makes sense, right? You got to put some more skin in the game if you want to make more money. Okay. We want to do an expiration because options expire. They have all options have a price tag, the expiration date, and a strike. How much we're going to pay for it, at what strike price, by what date, okay? So the expiration, maybe 30 to 45 days out. I'm going to show you something different on the options chain that you can make even more money in a minute. But usually the sweet spot is about 30 to 45 days out, okay? And we're going to do a delta around 20 or 30. I talk about delta in my week 2 of my course, but it's basically the probabilities that the stock is going to be given to us. So if we do a delta around 20, we have a 20% probability that we have to exercise our shares, meaning we're going to own 100 shares of that put. I'm going to show you what that looks like. Step 3, you collect the premium immediately. Okay. The premium hits your brokerage account the moment the trade fills. This is really important. You don't have to wait on, 30 days out or to get your income tax. No, the premium hits your account immediately. Okay. So options always trade in contracts of 100 shares. Okay. Once the premium hits your account, let's say you got $4 for it on the option chain. You'll see the way that looks like it's really $400. Okay. That strike times 100 is the cash that you have to set aside to own that, to make that $400. Okay. What is the return? The return is that premium, that $400 divided by the cash that you had to hold during that expiration period. Okay. Number 4, fourth step. Oh, hold on. Got some questions here. Oh, another out. Okay, so are we doing all this inside of our brokerage account like Charles Schwab or something? Absolutely. But we're going to do it on a trading platform called thinkorswim. I'm going to answer all questions at the end because I know you guys got some juicy ones, and I'm going to go over the most common questions that people usually have when I talk about the cash secured put. Excuse me, let me get a sip of water. Okay. So, step 4, you got to wait it out. 2 outcomes, both clean positive. Outcome A, options expire worthless. You keep the premium. Repeat the strategy. That's like when you pay your insurance company, if you pay them in January, they don't give it back to you in February. No, you got to pay them again in February. They kept that January payment. They're going to keep the February payment as well. So as the option, when you sell puts, you keep that premium as soon as you sell it. And then you do it again, and you do it again, and you keep doing it, right? If the stock happens to drop below the strike that you sold that put at, then you buy the stock at a discounted price. You want it anyway. You bought it at a discount, right? Okay. So let's run the math. Let's see how this looks, okay? So let's say I sell put, right, at a strike. Let's say the strike is 520. The SPY, I'm not sure what it closed at today. I'll take a look at that. But let's say it's trading at $530, right? Sell the put at the strike of $520, right? So I'm getting it at a discount. Right now, it's trading at 530. I sold the put at the strike of 520. That means, according to our rules, I'm selling, so I'm obligated to buy 100 shares of the SPY at a price of 520. Okay. It's currently trading at 530, but I sold the put at 520. So I have to buy it at 520 if it gets close to my put or goes below. Okay. I got it at a discount to what it was trading at. Okay. I collect $400 for doing that. It says $4 options control 100 shares. It's really $400 that went into your account. It's going to hold you. This is a big one, right? 500. This option, the stock is a big. It's a lot. $530 a share. That's an expensive stock, all right? It's an index fund. The SPY controls 500 shares, but that's big, right? So it's going to require you to hold all the strike times 100, $52,000. It's going to hold in your account, okay? This is for IRAs. For margin accounts, it actually holds about 25%. It doesn't hold the entire 100%, but we're talking about how to trade in your 401k. So I'm just letting you know that if you sold that strike, that put at 520, it's going to hold $52,000 in your account, okay, in your 401k. So what is this $400 divided by this 52,000? I'll show you the math. 400 divided by 52,000. Move that decimal place over 2 is 0.77% roughly, right? 0.77%. Times that by 12 because we're going to do it every month. Okay, 12 months in a year times 12. That's 9.2% that we made in addition to what the shares are already going to do. Like, because remember, when you put money in like a mutual fund, a 401k, it's going to make money most of the time anyway. But now we've added an additional strategy in addition to doing what it was already going to do. So now we're closing the gap. I hope you guys see that math. And compare this to a high yield savings account, for an example, that earns like 4.5% a year. And if you wanted to, like, buy the stock at a discount, a high yield savings account is not going to do that for you. Let me show you the math, okay? So I trade on a platform called thinkorswim. It is like the Bentleys of trading platforms, okay? You can do Robinhood or Tasty Trade. There's a lot of other platforms that you can trade off of. Thinkorswim is the Bentleys of trading platforms. I love it because I know what my commissions are. It's easy to use. It's all the charts are right there for you. You can customize it any way you want. You can make it as simple or as complicated as you want to, okay? So let's go. And I hope you guys can see my screen. So this is thinkorswim. Make sure you can see my screen. Switch. Perfect. Okay. So this is the thinkorswim trading platform. Okay. This is my paper money account. So it looks like this. You can customize it different kind of ways. This is the one that I teach off of. So I have all kind of different charts that I use. This is an example of the way it looks. Let's talk about the SPYs because that's what I referenced earlier today. Okay, so I knew that was low, but right now the SPY, and look at the, I love this stuff. Sorry guys, I geek out about this stuff. Okay, so the last from March 30th, the market's been on a tear. Look at these candles. From March 30th to today, June 1st, it went from $630 to $760. You guys, that's crazy for an index fund that controls 500 shares, 500 stocks. Okay, the market has been on a tear. Now is the time. Just saying. But you know what? It doesn't matter because options traders make money when the market goes up or when it goes down. We can do the same thing on the downside. Okay. So selling puts. I have a put on right now that I sold last week on NVIDIA. Okay. So this is a chart of NVIDIA. It goes back. So this is 6 months, 1 day of data. Every green candle is a day. Every red candle is a day. So these are all candles, these bars that you see on this chart. These are all candles. These show one trading day. So this candlestick that happened today, this big green candle, the one's all the way to the right, that shows you what happened today. Today, NVIDIA, let me draw this candle. So today, if you look at this bar here, NVIDIA opened at 215, went up to 224. H is a high. The low was 215.70. So it opened up right above right at the low, and then it closed at 224. So this is $9.17. NVIDIA is a behemoth, you guys. It's been a juggernaut. It's made so many people wealthy. Okay. So This is a type of stock that you want to sell a put at. You want good quality names, okay? So, what's the first step? Pick the stock that you want to own. No junk, something great, something like NVIDIA, okay? Where's NVIDIA trading at right now? It's trading at 224. What's the rule? Sell the put 5 to 10% below where it's currently trading at. Let's do the math. So if NVIDIA is trading at $224, let's just say 5%. I'll show you what it looks like on the options chain. That's $11 below. 224 minus 11. Sell the put around 213. You guys see that? That's for 5%. That's selling it 5% below. You could do 10% below as well. 224 times 0.1 equals $22. So 224 minus $22 equals 202. That's 10% below. So we have two examples here. We have 202 and like 213 for the 5%. Let's see what that looks like. So now I'm going to show you an option chain. Hold on, folks. It's getting real. So let's see. This is the way an option chain looks, okay? And I'm going to just circle some important things. That's the symbol, NVIDIA. That's currently where it closed at. So the market is open from 9:30 to 4 p.m. Eastern Standard Time, okay? You have after hours trading and before market trading, but stock options can only be traded during market hours from 9:30 to 4 p.m. Eastern Standard Time, okay? I'm also going to circle some other things that's very important. So this is our options chain. We're going to hit trade. We're going to drop down. Remember when I talked to you about expiration dates? So NVIDIA is one of the bigger stocks in the market. So it has more expiration dates, more dates for people to make money. So there's several of them. Not all stocks are going to have this many option expiration dates, but the most liquid options, meaning the date that the option is most traded is going to be the third Friday of the month. So let's go to that month, which is June 18th. So let's drop it down. Let's bring this up. Okay. So we could scroll all the way down. I have all my strikes as all, but you can make it like 14 if you want. I help you customize all of this. Okay. So now it's just easier to see. Okay. Actually, I'm going to make it a little bit more because I want to show you the 5 and 10%. Okay. So we said 10% below where NVIDIA is trading at is like 203, right? So let's see. I'm going to circle, and we're doing puts. So puts, remember the two type of options. Don't forget the jargon, calls and puts. Okay. So let's see, you want to do 10% below. So this is like 203, closest one is this. You buy at the ask and you sell at the bid. Okay. So this means when we place this trade, I click on this. This is an order ticket. I'm going to minimize this. What this is telling you that you want to sell a put at the strike price of 202.50. Let's just make the numbers even. Sorry, guys. It's easier to understand, I think. Let's do 205, okay? 205. So right now, NVIDIA is trading at 224. We're saying I want to buy it. If anything happens, if NVIDIA goes down, I'm okay to own it at 205, okay? So we're going to sell this put, and it's going to put so see it says $1.74, but because option contracts control 100 shares, it's really $174. That's going to be immediately deposited into your account, okay? It says $1.74, options control 100 shares. So it's $174 that's going to be immediately deposited into your account, okay? It's going to hold 205 times 100. So 205 times 100. In your IRA account, it's going to hold $20,500 in your IRA account. Okay. It's going to put $174 in, but it's going to tie up $20,500 of your money. Okay. What is the math? 174 divided by 20,500. What is this percent? 0.8%. Okay. If you times that by 12, that's 10%. With the decimal place over 2 times, that's 10%. Mind you, we got so far away from where it's currently trading at. Look, I'm gonna show you the chart. Right now, it's at 224. 205 is somewhere right here. See that? Like 205.42. I was trying to get perfect. Okay. So what you're doing is you're placing your trade right here. I made it green. Okay. You're placing your trade right here saying that by June 17th, or sorry, June 18th, NVIDIA is not going to be below 205, and you're going to get $174 to do it. Okay. Let's say you want more money. Let's say you want to do 5% below where NVIDIA. What did we say? That was 213. Okay, for math, they have 213s here. Look at this. 213, you get paid $345. Okay. So if NVIDIA does not go below the strike of 213, you're going to keep $345. It's going to tie up $21,300 in your account. Don't forget the strike times 100. Let's do the math, right? Because the math be mathing it. Don't lie. Okay. 345 divided by 21,300. That is 1.6% that you did on that trade. Times that by 12. That's a 19% gain per year. Can I tell you guys, I've been selling puts on NVIDIA all year, and I've been putting them on every 2 weeks because NVIDIA's been a juggernaut. It's been going up. And I go far away from where the stock is trading at. So the stock is trading. There's another strategy called a covered call. I was selling calls against it, and my stock got taken away. So then I started selling puts because I was like, I want to get back in, but I want to get in at a discount. And I just keep collecting premium because my stock has not been taken away from me yet. You know, my stock, I've not been able to buy into it yet because it has not gone below my short put. Okay. So you can even get tighter if you want to make more money. Just know that the odds of the stock, of you being put the stock of 100 shares are going to be higher. Make sense? So I just showed you an example of what the math looks like if you sell puts at 10% away from the current where the stock is currently trading at and 5% away. And it's a win-win situation, right? Because let's say you want NVIDIA. You're buying it at a discount. If it goes down, you get put the stock, 100 shares of the stock at a discounted price. And if you don't want the stock, you can sell it back. You don't have to keep it. This is the queen strategy that just the gift that just keeps giving. You could go out if you want to go out and buy NVIDIA right now, go buy it. Go look at it. It's 224. Trade. Let's see. Buy the stock, 100 shares, 224. That's going to be, let's see. That's going to cost you $22,420 to buy 100 shares of NVIDIA at where it's currently trading at. Okay. Or you can sell a put, any of these puts, get premium for it. If NVIDIA stays above 210, you keep the $270. And then you rinse and repeat. I personally like, pro tip, I set my order to get me out when 80% of my premium has been reached, which has been happening sometimes a week to 2 weeks, and I sell another one. So not only do I get the 270, sometimes I get 270 twice a month. So instead of 270, I get it twice a month, which is 540. So now the 21,000, you have to keep rolling up your strikes, right? NVIDIA is going up. So you need to keep rolling up your strikes if you want to get paid, right? So what does rolling up mean? Okay, January 1st, or let's start with June 1st. June 1st, I sell the strike 210, I get 270. 2 weeks, I go to 215, whatever it's trading at, get the 410. As NVIDIA is going up, which I think it's going to keep going up because I have targets and things on my chart because I've been trading forever. Then you do it again. Then you roll it up to 217.50. Then you get $5, which is $500. You keep doing this. You keep going. At the end of the year, instead of just your regular whatever percent gain that the overall market in your mutual fund has in your 401k, you would have gotten like 30 more percent on that money. That lowers the gap of what you grossed and what you actually earn from this simple strategy of a cash secured put. You could do this in your IRA. You can do this in your income account. In your income account, it doesn't hold the entire fund. It holds about 25%. It's more risky because you're trading on margin. But I mean, I don't think Nvidia is about to lose 20% of the stock anytime soon. It's up to you. You can do it on any other stock, right? Microsoft. It's a little bit more expensive, right? Because it's an expensive stock, $460 a share. So it's going to hold 46,000. Well, let's see the strikes. It's going to hold. Let's see. We want to do 10% below. Let's see. We want to do like 440. That's $555 immediately going into our accounts. Okay. We're going to rinse, repeat, rinse, repeat. We're doing this strategy on number one, stocks that are good, have a good valuation profile, profitable. We're not doing this on any meme flyers. We're going to do this on stocks that we want to own at a discount. Okay. We're not going to do this on crazy high flyer stocks with let me see, like profiles like, oh, this is not even a bad one. This is okay. This one's a different one. It's only $21, so you could do it. But let's say I picked a lower price stock for you so you can see what that looks like as far as your options. So this is $21 a share. If you want to do it, you could do the 20 strike and get $220, but it's so close to the $21, the odds of you being like assigned on those 100 shares are greater. You want to get further away, but you got to pay to play, right? So anybody have any questions so far? Let me know because I could stay here all day. I have some questions for you guys. There's been a lot of the memory chips stocks that have been going crazy. So let's say you have $100,000 in your account. Could you sell a put in your IRA on this stock right here? This stock is called Sandisk Corporation. It's currently trading at $1,761. I know you're kicking yourself because December it was at $187 a share. Now it's at $1,761 a share. That's crazy, right? But if you have $100,000 in your account, could you sell a put on this stock? Anybody? Anybody? No, you can't. Oh, my bad. I waited. Okay, hold on. So, Ida, no. And this is why. Because Sandisk is trading at $1,761 a share. If you only have not only, but if you have $100,000 in your account to sell a put, let me show you the way this looks. And we're picking the June expiration, okay? Because that's the most liquid. Let's go down. Let's say we wanted to get 5% below, okay? So 1761 times 0.5 is $88. So we can get $88 away. But look at this. This stock moved $66 today. So let's do it though. 1761 minus $88 is 1673. So what's the closest strike? 16 to 1673, 1675. So if I sold a put at the 1675 strike, which is 5% away, it's going to put in my account $10,750 for one put, right? So it'll credit $10,750 in my account. How much is it going to tie up? I did the 1675 strike. Okay. It's going to tie up $167,000, $167,500. Okay. That's a lot. If you have it in your account, you can do it. If you want to own this stock at 1675, these are one of the high flyers. I'm not touching it. I'm not touching it. It's too risky. Okay. I might do other strategies on it, like spreads. I teach that in week 3 of my course. But I can't sell a put on something like this because it ties up too much of my capital and it's too risky. It's not right now, it's not a profitable company. Can you make money on it? Absolutely. But I'm not gonna sell puts on stocks that are not profitable. I'm gonna do like an Nvidia, your JP Morgans, your Microsofts, stuff like that. Okay. Okay. Does anybody have any more questions? So that's what I teach in my course. I have a stock options course called, let me go through the questions. How much money do I need to start trading? It depends. I would say at least $3,000 to $5,000 in your account. Now, I know if you have $3,000 to $5,000, you're going to be limited on what kind of strategies you could put on. The cash secured put you could put on, but you got to put it on cheaper stocks. You could do like your Fords, which Ford I think was trading at like $17 a share. It's going to tie up $1,700, which is 50%. And I never recommend tying up 50% in one strategy. Okay, so you should definitely have at least $5,000 to start, especially if you're going to be doing this type of strategy. Okay. Is this legal? Can you do this in an IRA? Absolutely. What if the stock crashes? If the stock crashes, like I just showed you, if it goes below your strike, you're going to own that stock at that strike. If you don't want to own it, sell it. Okay. Or you can sell calls on it, which is another strategy I'll teach you. Okay. Why hasn't your financial advisor told you about this? Because they make money on mutual funds. They don't know how to show you these type of strategies because they have to handle such large funds. Okay. Will you get assigned on shares you can't afford? No, because it's cash secured. Okay, in your IRA, it's cash secured. If it's in your margin account or your individual account, yes, that could happen. So this particular strategy is a cash secured put. You have the cash in your account to cover this. Okay. What's the question? You said, who is structuring the fees in these puts and calls, the owner or the trading platform? The owner of the trading platform. So the owner, so we are. So every time I sell a put, it costs me 65 cents per contract. So that's the fee to sell a put is 65. To each any contract is 65 cents. So not $65, 65 cents. Like cha-ching cents. 65 cents. Okay. Which is very good. Okay. Any more questions? Okay. So what's next, Queen? Tonight was the strategy. The full course is the system. So I created this course for you. It's called the Stock Options Beginner Mastery Course. So it takes you on a journey for 4 weeks from beginner to stock options trading mastered queen. Okay. Week 1 is the foundation. Risk management, mindset, brokerage setup. I help set up your brokerage account with you, Charles Schwab, and I customize all your charts on thinkorswim. Week 2, we talk about strategies, calls, puts, your watch list, your Greeks, everything that you need to be a proficient trader. Week 3, it's all about something called technical analysis, where I teach you how to read a chart. We're not just going to go in there and look at numbers. You can do that on Robinhood. Maybe you win, maybe you don't. But you're going to learn how to read a trading chart to maximize your profits. Okay. I'm going to show you how to understand how money moves by reading charts. So we can predict the future price of a chart by the way the future price of a stock by the way the chart looks. That's a study called technical analysis. Okay. That's all about week 3. Week 4 is credit spreads. Oh, I love this. This is like number 1 strategy, credit spreads. I always have them on in my account at all time. And this is how I make $2,000 a week. Okay. That's my goal. $2,000 every single week on my option strategies. Okay. Credit set spreads are awesome because I don't have time to be in front of a chart all the time. Like in your day, like if you want to day trade and stuff like that, you can. I could teach you how to do that. But a lot of us are busy. We have full-time jobs. We might have kids. We have other things that take our attention. A lot of times you don't have time to sit in front of a trading chart all day. So you put on certain strategies that fit your lifestyle. Okay. And I teach you that. And week 5, putting it all together. So I'll teach you how to trade in 4 weeks, but week 5 we'll put all together. You're going to be paper trading. Actually, we'll paper trade earlier than week 5, mostly like week 3. Week 5 is probably when you start wanting to real trade. But this is my stock options mastery course. Okay. This is not the hand holding. This is kind of like what you're on your own. But as a bonus today, which this course includes 29 video lessons, 22 workbooks. I'm actually going to add some more AI stuff. But you get access to it for life. Okay. All my course updates. You get access to that community that we have. It's a really nice course. Okay. The investment, $497. This is a one-time investment and you have access to it for life. And at the end of it, when you go through it, you'll know how to trade. Okay. Doors close Sunday, June 7th at midnight. The next enrollment is going to be in July at a higher price. Okay. The first 10 buyers tonight, you get a one-on-one strategy call with me for 30 minutes, personalized within the first week. And for the next 3 Mondays, I'm going to be live with you to go over the stuff in the course, to show you what I'm talking about live. So the information in the course, I'm going to explain it to you for the next 3 Mondays if you purchase today. Okay, so those are the bonuses. Let me drop the links in the chat. And make sure you ask questions. If you have any questions, please let me know. Bull Bear, we don't care. Options traders make money when the market goes up or it goes down. So I just showed you one strategy today called the cash secured put. And my question to you is, when was the last time like you did like some deep learning, some concentrated learning that was just for you, right? So like we're always like, helping our kids like with their finals and stuff like that. Like that's what it's going on right now. But like when was the last time you did something for yourself? Imagine at the end of your summer, come September 1st, somebody asked you, what did you do this summer? You said, I learned how to trade stock options. Wouldn't that be great? It's time to put you first, guys. I want to put the links in the chat. Let's see. So you can see if you're interested in my course. Here's the links. This is for, yeah, I love the saying, Bull Bear, we don't care. We don't. Options traders make money when the market goes up or when it goes down. So this is a link from my course. Oh, I also have a 12-week coaching program. I'll put that in there too. Where I teach you how to trade in 90 days. I actually hold your hand through that one. It's a commitment. It's a commitment. It's $49.97. But that's the one. I mean, that's the one I would do, of course. I paid $40,000. That's why I know how to trade really well. But everything that my coaches taught me, I'm giving it back to you. So if you're interested, come join me. Let's get paid. Let's get paid. Does anyone have any questions, any additional questions? And thank you so much, you guys, for coming out today on your Monday. I appreciate you. I hope I made this journey less, painful as far as showing you in real time what it can actually do for you and your family. Thank you. Thank you. Thank you. Thank you. God bless you guys. Appreciate you. And let's get paid. And if you guys have any questions, you guys, I think all have my cell phone number. I'm here for you. Ciao.